What's going on, everybody? Michael and Coco here. You're watching the Daily Stock Market Brief Show. This is the show that we do Monday through Friday, 5 days a week. We use technical analysis and intramarket analysis to get a good idea as to where the market might be headed next. Today's show, we got a lot to talk about. I was going to be going over some quarterly charts because it was quarter end and some monthly charts, but I decided to wait on the bigger term charts towards the end of the week. But we have a lot to discuss on today's episode, being that which it is the end of the month and April typically brings on some big move to the upside based off of seasonality. So we're going to be discussing that and various charts. With all that said, let's hop into today's episode. All right, everybody, welcome back to the show. We're going to start off looking at a seasonality chart and then kind of flow through these charts. I'm doing it a little bit differently than how I usually do with all the timestamps because I'm just kind of flow through kind of my thought process and then wrap everything up with a conclusion. So first off, we're going to be going through bullish and bearish perspectives here because the market has been crazy. I've been trading all week and it's been very hard to eke out gains this week and last week because there's just been weak internals and a lot of false breakouts, a lot of false breakdowns, a lot of whiplash, back and forth price action taking place. So it's been very, very difficult to catch momentum for breakout traders, such as myself. I'm a breakout trader. I also fade a couple other different type of strategies, but it's been very difficult to find momentum. So I'm looking at a seasonality chart. Look at April and March. So March right here, it's typically choppy. April comes, this big burst of energy. But we've shown in previous market briefs that like 2012, for example, 2013, or was it 2011, 2012, April actually saw a bit of a pull down in the beginning, and then you saw the ramp. So we're going to be going over, like I said, bullish and bearish cases. The first thing I want to do is go over the market dashboard. Okay, this is the 11 sectors that make up the S&P 500. We had 5 that were in the green. Okay, this is important to note. 5 that were in the green, 6 that were in the red, but yet we hit all-time highs in some varying indices. Like the S&P 500 tapped into an all-time high today. All right, so it's doing so with only a few leading sectors, and it's being held down by a few as well. Now, that's important to note because you would think that with all-time highs, you would see more of the market participate. Now, leading the way was tech, consumer discretionary, and utilities. First off, consumer discretionary, as we talked about on the close of last week, how I was saying that looked like the biggest opportunity coming into this week. And so far we've been pretty spot on with that. And the reason why I said that was because looking at relative strength and how much of a hit it took during last week, especially during that Archegos hedge fund unwind, which we still don't really know quite the repercussions of what's actually taking place with all of that. It's a little bit uncertain, and we don't quite know, how much damage the banks are going to take from this, or which ones are going to be taking the hits from this, or if there's other hedge funds that are going to be, blowing up too like that. So it's just very interesting times. Now, technology was leading the way, and then, like I said, utilities here too. Utilities is more of a risk-off type move, which you're seeing utilities take the lead here, which represents more of a risk-off play, which is also, okay, what's going on there? Now, tech. Why did tech do good today? Well, yields today, let's pull up yields. They were at a pause. They were at a standstill. And if yields are at a standstill, that benefits tech because on the rise, when yields push more higher and higher, tech actually feels some pain, as we've seen through this ramp up here from February or even before. Tech has been getting this rotation sort of out of that everybody's been talking about. And you can see here the 10-year, little bit of a negative divergence coming into this area, this red zone right here, area of resistance. We had it down here, but it kept on blowing through it. So if yields, from a bullish perspective going into April, if yields want to take a little bit of a breath, that could be very, very good for tech. Now, I want to show this also, the dollar. Now, the dollar has been breaking out of this bull flag, and today we have a little bit of indecision taking place. It was really bullish, then it was very bearish, and then we closed basically where we opened slightly down on the day. Now, this is not necessarily bearish because we did get above the 200, but it does seem like, okay, like it's taking a breather here. What might take place? Now, if this is the extent of this breakout to the upside and it starts rolling over, that could be very good for equities. As we've seen previously, when it cracked through 92 to the downside, the S&P 500 really started ramping up. Now, the S&P 500, which we'll get into, is in this rising wedge type pattern, and the daily candle was an inverted type shooting star. So if the dollar comes down tomorrow, maybe this corrects itself, and we have an update tomorrow, and we finally reach that 4,000 level. We had some late day selling, which was, it seemed like that was going to be taking place at some point just because of the weak internals, and then the VIX starting to move up, and the S&P 500 moved up, just all kinds of crazy stuff there. However, I want to call out the Qs because bonds yields didn't really move too much, all right? So when yields didn't move all too much, that gave the benefit for the Qs, especially the semis and the tech, so the XLK and XLK moving up at the very end really did help the Qs out here. So we saw a pretty nice big day. They were the leader. The NASDAQ was the leader. You can see up 1.5% for the day. Now we are kind of approaching this somewhat of a neckline. Now I read you this out just to give the possibility of a bullish breakout here heading into April. So this is a bullish perspective. All right, so if we break out of this and seasonality holds true, for example, in April where we get these ramp up, this could easily just push this all the way to reach the previous all-time high right around 335. So you can see that here, the little left shoulder, head, right shoulder, inverse head and shoulder, that could be that area that got to break through. I will say that this neckline is also in confluence with the 50 period moving average, and the volume on this move isn't all too good, right? So we've seen more volume over here, and then these little bump up. Yeah, it was a little bit of an increase in volume, but nothing to really convince a breakout to the upside at this particular point in time. Now, I wanted to point out the XLK because the XLK was the leader in this sector today, and the XLK, you can see, got above its 50 period moving average. All right, the 50 it's at 53.24 on the RSI, so it's finally getting above that midway marker. And then you also see the price percent oscillator just gaining some steam, gaining some momentum here, but it's still a little bit below zero. We put in a higher low right here. We're above the 20, we're above the 5, we're above the 10, we're above the 50 now. So this could be the start also of a strong move in tech. Now, if yields are topping off and they slow down in April, that's a very good sign for tech based off of seasonality and what we know about how the tech responds to yields. So what can we do? Well, we can look for a breakout of this 134, 135 range, and that could potentially offer up more momentum to the upside. Like always, though, you need to be careful in this environment because there's been a lot of whipsaws. So I'm liking the looks of this so far for that short term. Now, another thing I want to call out that's very helpful to the NASDAQ is that's the SOXX. So this is semiconductors. Semiconductors had this left shoulder head, right shoulder here, and you saw a big move breaking through that neckline today. So semis, if April seasonality holds true, semis are showing some strength here. Like, for example, ticker symbol AMAT. I pointed out on my previous, not market break, but my last sponsored video, I talked about AMAT. And, well, I didn't. Somebody asked me to do some analysis on it, and I pulled it up, and it was a nice breakout of an ascending triangle, and it looked really solid, and we're seeing some more strength in that today. Price percent oscillator is above zero. It's trending up. It's bullish. So, and we're above the 50 and we're back above the 20. So this could be the early start of a strong move here also for April. Now, I'm talking bullish terms on a lot of these cases. I will point out some bearish things just so you can have an overall good picture and kind of come to your own conclusion. Really, if you're new here, I do these shows to really just lay out all my thoughts, and then I kind of go back and I'm like, okay, so how do I want to approach it? So here's the BP-NDX. The BP-NDX I like to use as an internal signal too when we get into oversold or overbought areas. But this was an area of resistance here on the RSI, and we just upticked above it. So that to me says, oh, we might be seeing some strength coming into the NDX now, which is the Qs or the semis helping drive this, right? Or tech. And we're starting to see it break above, which could give us the clear shot up to that 70 range on the RSI. And then we might be get to that overbought area. So that's something to keep an eye on heading into April. And then I want to go into the S&P 500. Like I said, we have a possibility here of a rising wedge, right? It's overall in very bullish context. We have the 20 sloping up, the 50 sloping up, the 200 sloping up. The only kind of negative thing right here is we hit an all-time high on the S&P 500, and we weren't really presented with like a lot of strength from the sectors other than just those top three: consumer discretionary, tech, and utilities. And then the candle itself doesn't look all that great as well, but we need confirmation to the downside to potentially see that break down to around 3,900 where the 20 period moving average is, and then it could offer up some support. Now, if we look at some internals of the BPSPX, what do you know? We have the RSI also ripping a little bit higher. It's not overbought yet, but it has the possibility to go higher. And we broke through this little trend line here on the BPSPX chart. So now 73% of stocks are on buy signals based off of point and figure charts. So this could very well push us higher into an overextended reading. It's letting us know, hey, we still have some room to go. Now, another thing that's concerning more from a bearish perspective is we're reaching all-time highs, right? We're not getting all sector participation. And then on top of that, look at this breadth. Look at the NIMO. We're still negative here. So negative divergence there. We've seen how it played out previously, but that to me is also just a little bit concerning. Another thing that I want to call out here, back to the S&P 500, this rising wedge, I wanted to call out the Pring bottom fisher. Now, if you've been here for a while, you've seen me use this. It's really good with finding market bottoms, but you can use it to find market tops. What do we see here? Well, the Pring bottom fisher is about to cross itself over. The blue line crossing under the 10 period moving average. And the blue line is the Pring bottom fisher. And the 10 period moving average is the 10 period moving average of the Pring bottom fisher. And we use that as a signal potentially that it could potentially roll over. Well, the pattern suggests a rollover. The candle suggests it to roll over. And then this indicator suggests that we have room to fall down to around 3,900. It could go lower, but that's where that trend line is of support. Now, last time it crossed over here, it fell to the downside. When it crossed over here, we actually had a shooting star type kind of candle, not a shooting star, a hanging man type candle. Then it started to roll over right here. Guess what? We didn't roll over. We went higher. Okay, so that means that there's no guarantee here. It's just something to bring to your attention. Remember what we said about 2011 and 2012, right? Based off of the seasonality charts, it looks great, but we had those pullbacks and then we had those rips. So it's something to consider. So if you go into a long position, you might want to extend your stop losses or reduce positioning sizing just to make up for the possibility for a down pull into support, and then maybe the possibility of a rip. And then we have this one here that it crossed over and we did roll over there too. So 3 out of 4 times when we had that crossover, we did roll over. So that's just something to note. Now let's look at the Dow Jones Industrials. The Dow Jones Industrials had a somewhat of a weak day, down 85 points, right? We're still in this megaphone or ascending, broadening wedge pattern, but okay, so that's a bearish perspective, but look at the 20 sloping up really nicely, the 50 sloping up nicely, the 200 sloping up nicely. It's in very bullish context. Now, what is a little bit of a concern is a slight negative divergence here on the price percent oscillator and a slight divergence here on the RSI. Now, that has to be confirmed, but it's still there to worth noting. Now, if it does roll over, look for the 20 period moving average to potentially act as a level of support. It's done it previously. Now, what's very interesting here is the internals of the Dow. Look at the BPINDU. The last 2 times the RSI reading touched down to 29 or lower, which is an oversold reading, you can see here it ripped to the upside, and right here it ripped to the upside. Now we're reaching back down to this oversold territory while we're at right around the all-time market high. Is this suggesting that we might potentially still get a rip higher? And we need to keep that in our back pocket as a possibility. Now, it can get oversold further than minus 29 as we've seen here. And guess what? When you look up, it did rip up higher after just pulling back a little bit and then ripping up higher. Here, the same exact thing, obviously here too, but that was during the pandemic. That was a little bit different. So just note that, yeah, we're getting oversold, And if you look here, we have support right below us, the 20-period moving average. So if we pull down a little bit further, this could potentially offer up a good reward. We did have some increased volume today on this down day. Perhaps that's suggesting that we have a move down. Or you can call this potentially a bull flag right here. You see this bull flag, okay? Then we broke out. And then you've seen this potentially flag right here where we can head up higher. So we got to keep that as a possibility as well. Now here is the NASDAQ Cohen high low, and I like to use this for finding market bottoms, but it's really only good when it goes down to 0.05. You can see here in 2020 and the pandemic, touchdown to right here on that very overextended reading, and man, that matched the market bottom really well. Same here in late 2018 when we had that pullback, it came to overextended, and that was just like key on to the market bottom. However, I just wanted to call out, we're not near there, but we are in an area where we've seen previously bounces take place. So we're at a 0.49 reading, and the last time it was there, we were right here on this pretty big red move to the downside, and then we saw a rip higher. We pulled down right here to this area, and then we saw it rip higher. Now we're right there again. Now it hasn't turned itself over, but I thought that it'd be worth noting. Now, here is the NIAD, and the NIAD is showing us some internal stuff, internals of the market. You know, is there strength, you know, helping this move forward, or is this, you know, S&P 500 moving higher, but it's not being supported by the internals? Now, this is the advanced decline line. I'm only showing a 1-minute time frame, and you could see here we had a rising wedge pattern on a negative divergence, and it broke down. Same thing here. I was showing this throughout the day that we just kept on jamming up higher on the S&P 500, but the internals, they just weren't supporting it, and I had to keep calling out, and I just kept on taking little stabs here and there to fade the market, and towards the end of the day, you can see we went to consolidation, and then it rolled over, finally confirming what I was seeing. Now, the VIX. The VIX is important to keep an eye on, sorry. We are at 19.4. We still have a gap below us, all right? And this, what's that? Adobe Flash. Remind me later. What gives? What gives with all of this? Pop-ups, what the heck? All right, so we got the VIX, right? And this is down near an area of support. We have the gap, we have this trend line acting as support too, and I just kind of redrew out this down channel right now, and then also wanted to take note of this cupping pattern. So from a bearish perspective, we're at this area of support of all this confluence, meaning the gap, this trend line, and the possibility of this being a breakout of a falling wedge or bear channel right here, and then you see the cupping of the RSI. So if we break out above that, that could spell out trouble for the S&P 500. Doesn't mean that there aren't individual stocks that can't really rip higher, but it is worth noting where we stand in this picture as the market's pressing to all-time highs. So we got to keep an eye on all of this. Now, during the midday on Twitter, I posted a screenshot of the 15-minute time frame on the VIX, and it was coming down into the area of support. You probably remember if you follow me on Twitter, and it just made sense, like, okay, be careful right here. And then we started ripping up higher. Okay, after the gap was filled today, we started ripping up higher, but the S&P 500 wasn't even budging. It was moving higher with it. So it was very confusing, and I can only chalk this up to just end of quarter rebalancing and then the end of the month. So that's all. That'd be my only guess right now, as people are repositioning things while we're seeing that take place. So come tomorrow, as a new month, maybe we'll see some changes there. Now, I want to look at silver, and I want to look at gold, and I want to look at Bitcoin, a few other things here. So silver saw some strength. We gapped down, and then we cut through more than halfway of this previous candle. That right there is pretty bullish for silver. Now it needs to be confirmed, right? This right here is a piercing pattern. I believe it's called a piercing pattern. Yes, piercing pattern, this 2-bar candle. If we get follow through, that could be a good sign. We have a bullish pattern. The bearish case here, though, is we're still below the 200. The price percent oscillator is still trending down, and then we're still below the 50-period moving average on top of all of that. All right, so just be mindful of all of that. If you're trading miners or if you're buying into positions, but this does look pretty strong right here, especially when the dollar was showing some strength today. Now this is where it gets actually really, really important. because we have all these unique areas, right? So we have the yields like kind of potentially topping out. We don't know for sure, but if they are topping out, that could be really good for tech. And what else could that be good for? That might be good for gold, because we've seen how the 10-year in August, the 10-year pretty much bottomed. Actually, I'll bring it right back up. Okay, let me bring that back up. The 10-year yield in August right here, boom, boom, that the blue line is the 10-year, bottomed. And then we started seeing it move up. Well, if we look at gold, where's gold? Gold is right here. If you go to August, that was the peak. All right, and then it started moving lower. So if yields are going to take a breath and stop pressing higher, that could be good for gold. We don't know if that's going to be the case, but that could be good for gold. That could be good for miners. And then not to mention, if we top that on with the dollar chart, which we've been seeing it ramp up pretty fast, pretty aggressively out of this bull flag, setting a target that could reach all the way to 95, 96 without hesitation. However, now we're starting to see some strength in gold, strength in silver. It was a pretty good day. Could be a one-off. You know, I can't rule that out. But if this shows some weakness here, and this is also topping off, we're talking that could be very good for miners. It could be good for gold and silver. Now, there was that death cross right here in gold, which we talked about a while ago. We talked about this bullish divergence. I redrew out this just so you can see this bottom channel trend line. And then this, I connected from here down here. This could be a falling wedge, which is a bullish type pattern. And if we break out that peak, could be a good sign, but we're still below the 50 and still below the 200. So still, like I've been saying, there's a lot of work to do here. And I'm not convinced that the sell-off in gold came to an end, as of at least right this particular point in time. Now, Bitcoin is getting above that area of resistance right here, so that is a good sign, but we've had a little bit of a pause today and a little bit of uncertainty. It's a doji indecision type candle. It's saying, hey, like, are we breaking out right here or are we not breaking out here? It's very undecided, and you can see, like I've stated, Bitcoin do really well when the dollar falls, and if the dollar is topping out right here, that might benefit Bitcoin. I want to call out there is a negative divergence here, negative divergence on the price percent oscillator, but it does look like we're about to have a bullish crossover. So perhaps it's just gearing up for a stronger move to the upside. We're above the 50 period. We're above the 200. It looks bullish to me. You just need to be somewhat cautious because this is a more volatile asset and it could run away from you very fast, especially if you're not monitoring it. So just make sure you're paying attention to position sizing. Now here's crude oil. Energy took a big hit today. Well, that's probably in due part because of WTIC, like crude oil here. We took a 2.3% hit to the downside. It's still within this channel. We have support down at 57 and we have resistance right at 62. We close back below the 50 period moving average. If this continues to take a little nosedive and break through this, we have support right around 54. I would say that I'm hoping for it to reach down to this level, because if that is the case, if it comes down to around this range, that should put us on a good terms on the weekly chart. And I'll show you that at the end of the week, the weekly chart. And that could offer up some very good opportunities to get back into energy stocks as they've been ripping higher. They put in higher highs, higher lows. Now we're taking a breath, right? It's pulling back, and that just presents a lot of opportunity to me. So don't be shocked when you see sell-offs take place in commodities after they've been ripping up 100+%. All right, everybody, that's all I have for you on today's episode. Just to recap, okay, there's a couple important things here. Why we notice yields kind of go on pause right now, that was very beneficial to tech. So coming into April, seasonality is typically very bullish. Now we called out bullish things and we've showed bearish things. So I want you to draw to your own conclusion of how you would like to approach this market. Me personally, I'm looking at April to be bullish, but I'm trying to find value. I don't want to buy into things that are already at all-time highs unless if I get follow through of pending breakouts with some quality volume. And I'm not seeing that right now, but there are particular sectors that I am interested in, one being cannabis. The MSOS does look pretty strong right now from a weekly perspective. It has a nice solid hammer candle on a 20-period moving average. I posted that on Twitter. So I'm going to be keeping an eye on that. There was ticker symbol SOLO that looked like a decent setup. So there's various things that I am seeing within individual sectors. However, you just need to be bullishly cautious to, I guess, make it easy to understand. So you can be very bullish because the market is presenting itself in a very strong nature, but you just need to be cautious trading this environment because we're getting a lot of chop, a lot of whipsaws, and really, this investing, trading, whatever it is that you do, it's all about managing risk. It's not about focusing on how, where your target is or how much money you can make. Although it's important, you need to focus. If you want to do this for the long term, you need to focus on that risk. So that's all I got for you on today's episode, everybody. See you later.